tonight for our special webinar with a good friend of Market Chameleon, Felix Frey. Before we get started, D, you want to do the disclaimer?
Yep. Hi, everyone. Before we get started, keep in mind we're not registered investment advisors or broker dealers. We're not telling you what to do. We're just sharing ideas. If you need help, call your broker. That's what they're there for, to help answer your questions, provide you with guidance. There's the disclaimer.
All right. Well, before we get started with Felix, we have put in the YouTube chat a link to the Zoom meeting. We have quite a few people on Zoom right now. Wow, almost 50 have popped in already. If you want to ask a question of Felix at the end of his presentation, click that link and come on over. Everyone, you can either put your questions in the chat or raise your hand, and you can come on and ask your question live via your mic. You don't have to show your video, your face, just your beautiful voice, and Felix will answer any and all questions related to his presentation. With that, Felix, let's hear a little bit of that background for the chameleons who haven't heard from Felix Frey before.
All right, just want to make sure you can hear me okay. Yeah, we're all good?
Oh, it's perfect. Let us know, people, if you can't hear Felix. I can. It sounds real good, Felix.
Good. All right. So today we're going to present. Can you see my screen? Let me share it. Here we go. All right, perfect. How about now?
Yeah, it looks good.
Okay, perfect. Perfect. All right, perfect. So today we're going to talk about how to use historical data with an options trade idea. Again, my name is Felix Frey. Love coming on the show. Thank you guys for having me. This is awesome. And I've been using Market Chameleon from the very beginning. Almost the first day I opened up, I actually was calling Dimitri and getting him on the phone and discussing what great stuff you guys have. So this is a real pleasure for me. And here's a little background very quickly. I graduated the University of Pennsylvania in 1995, the Wharton School. My first job was in Chicago. I worked for Swiss Bank O'Connor, and O'Connor was known for two things. Essentially, they were known for making a lot of money in the options pits, but they were also known for great education. A lot of people were recruited out of O'Connor and got big jobs across Wall Street over the course of the 10 years between, let's say, 1990 and 2000. After Swiss Bank O'Connor, I was recruited back in New York at Bank of America. And that's really where my career took off. I was with a great group there, headed by John Sandelman. And he was just a great manager and a person that allowed his employees to either sink or swim. We were dealing with some of the biggest guys in the world, and back then they weren't as big as they are today. The guys like when I do this, I think back of like Bill Ackman, who was not he's very, very big now as far as money in the management. But back then he was a hedge fund manager, running around with a couple $100 million, nothing like the billions he is today. But, at Bank of America, we were meeting a lot of these guys and dealing with them face to face and trading against them, giving them ideas on a daily basis. After that, I got a job eventually at Scoggin Capital Management, and that's where my career switched gears. I wound up being on the buy side as opposed to dealing with all the different customers. I was the customer, and that was a different experience, but a very important experience to the next step, which was I wound up leaving Wall Street, seeing a big hole in the industry, in the options industry. I'm a big buyer of options. I've been a big buyer of options for many, many years. I know that the hedge funds are big buyers of options, and I decided that I wanted to create OptionsGeek and fill a void of really. There's no education out there that teaches the individual how to actually buy options and how to buy them in a way that gives them an advantage. More specifically, there's no answer to the simple question, which option strike do I choose, right? So you can look all over the internet, all over the YouTube, you can get any education you want. You won't find that answer. There is no answer out there. Okay, so I built 3 steps to profit, which is this options trading system that contains brand new education, groundbreaking education, which help you answer questions like I just gave you, and puts things into simple bites, which is always a good thing. The second thing I did is once I built the education, I actually had to take these new concepts that I developed and turn them into this tool, right? If I want people to choose the right option, I want them to understand the concepts and understand what the value of options, and then I need them to actually do the work. But nobody's going to actually do the the math. So I had to build this tool, and I wound up spending several years trying to get a patent. I finally got a patent this last year. Pretty excited about that. You know, to get a U.S. patent on a business process, you got to prove two things: one, that it's new, and the second, that it's valuable. And so, you know, I wound up passing that test, and took a long time and trying to convince the U.S. Patent Committee that it was valuable, it was new, there was nothing like it. And so that I'm pretty proud of that. That's the new options chain, and you know, that's the tool being used by most people who have taken my education. Last but not least, I needed to add these trade ideas, because people wanted, you know, they wanted more than just the education, than the tool. They wanted the education, the tool, and then Felix, give me some ideas, give me things that I can play around with. So I give the trade ideas, and you know, I call it winning picks. Not all of them are winning, but you know, at the end of the day, I'm trying to find great options trade ideas. And the reality is, you know, many people are confused by what that means. What's a great options trade idea? So that's what 3 Steps to Profit tries to teach. It tries to help you understand risk reward and what's a great trade today. So I'm going to show you, we're going to walk you through one trade that's actually a live trade right now, a winning picks trade that we have on. And I'm going to show you why it's a great trade, what makes it a great trade, and how we find it. And part of that is going to be, a good part of that is going to be finding the story with data. Okay, so let's jump into there's my buy options like the best in the world, which is how the best guys do it. But let's go jump into what a trade idea, when I'm looking at a trade idea, how do I actually think about it? I've broken it down to essentially 3 parts. One is unusual options activity or options analysis, charts, and what I call story. What makes it exciting? Give me a trend, give me something that's making it exciting, fundamentals. What's the story behind it? Today, we're going to focus on UOA, although not the beginning part where we're filtering. We've done that in previous webinars, but today it's going to be, you know, how do we dig in? How do we dig into the data and to the details? Okay, the first thing that we're looking at when we're looking at UOA, okay, if you're going to play this UOA game, you need to find the option buyers. Okay, option buyers, the logic behind it is simple. An option buyer is buying leverage. He actually is buying that option because he thinks there's going to be this outsized move in the stock, bigger than what the market expects, whether up or down. Sometimes he could be buying calls because he thinks the risk is to the downside. Sometimes he can be buying calls because he's trying to leverage the trade. But first and foremost, we're trying to find option buyers. But it can't just be an option buyer. It's got to be specifically a buyer to open. Okay, buyers to close have started their trade already by selling options, and buying them back simply means they're trying to either take a profit or just manage the risk there. So we're not getting the same signals as someone who's an options buyer to open. Okay, that's the 2 most important things when you're looking at UOA, your unusual options activity. Now, the question is, how can you be sure? That is the question. How can you be sure that what you're looking at is an options buyer? And how can you be sure it's an options buyer to open? Okay, this is a very, very important question. Most people just go by this question. They're just chasing around anything that comes in. And I'm going to show you, I'm going to start off by showing you how there's this misconception out there that people, and a trap that people fall into, and you can only really find the answer through data. So how can you be sure? Well, you're going to need data, and we're going to show that. It leads us to detailed options analysis, which ultimately leads us to MarketChameleon. Okay, so this is really where we're going to concentrate today. I'm going to show you the charts and the story a little bit after, but we're going to really concentrate on how do we determine an option buyer? How do we figure out what's actually happening? And how can we be as sure as possible, right? Trading unusual options activity, which means not just any one trade. When you're trading the strategy, it's trading a bunch of trades. So you can you're basically trying to use the math. Okay, when you're trading unusual options activity, it's not about any one trade. It's about using a strategy over a bunch of trades to find that edge. And the question is going to be, how can we be sure? It's predicated on finding buyers to open. How do we be sure? How can we be sure? Let's get into it. The first is this misconception. Okay, so there's a lot of products out there, a lot of products now, it seems like one every day, where they're sending you alerts. And the alerts might be, you know, an option trading it at 10 o'clock in the morning, and it was on the bid. And so that's a seller. Stock, the option traded on the offer, and that's a buyer. Okay, this is a big misconception. I would give you a warning that that's not always the case. Okay, it's not always the case. And again, if you're using the strategy unusual options activity, it's critical that you find option buyers to open. It's critical. It's the only thing I care about at the beginning, right? If I'm going to find a pool of trades, we go to the scanner, we find a pool of trades. I need to make sure I have a pool of option buyers to open. Okay. This is a misconception. I'm going to show you what that means, or what I mean by that. Okay. Here's, for example, would be an alert. Forget about the stock. It's not even important, right? The May 40 calls in XYZ. The time is 11:54, 12 a.m. You could see that on the left. Okay. 8,944 contracts trade, and then 1408 trade. They trade at 380 and 370. Okay. It shows the bid, and but right under market price, it shows bid ask 384. The side is bid or below. So what does that mean to everyone? Well, if you're getting that alert, people are going to think that was a sell. Okay. On the bid, it's a sell. On the offer, it's a buy. If we back out, and now I use MarketChameleon to back out to actually see the prints before the trade happened. So we see at the bottom, it's 11:54, but at the top, it's 11:49, 11:50, 11:51, 2, 3, and then 4. You can see the progression of the bid offers and the actual trades that are happening. You'll see 350, 360, 370, a 368 print, 72, 79, 80, 70, 80, 80, 80, and then these big trades at 89.44. What's happening there? Okay, what's happening there? What do I think is happening there? Well, the reason this can get confusing, these signals can get confused, is because of the way these trades happen. So you have to think about it like this. At 11:49, trader comes in and wants to buy, let's say, 10,000 calls. Okay, wants to buy 10,000 calls. I'm the trader that's going to offer him. I'm the market maker upstairs at Bank of America, and I'm going to say, I'm going to sell it to you at a certain price. I'm not going to sell it at 350. If the market's 340, 360, I'm not selling it at 3.5. I'm not selling it at 360 likely. Okay, especially if I have no other positions on. The reason I'm not going to do that is because of the Delta Hedge that I have to do underneath. What does that mean? That means when this person is going to want to buy 10,000 calls, okay, on a, perhaps let's call this a 50 Delta, for example. If he's going to buy 10,000 calls, me as the person who's going to sell it to him is going to have to run out into the market and buy 50% of 1 million shares, which is what 10,000 represents. So that's 500,000 shares of stock. If I can't get the stock at the exact point it's trading at right now, then I'm not going to get the right. I'm not going to be getting the right price at 360 or 370. So if I sell it at 360 and then I go buy stock and the stock is $1 higher, I'm going to lose a lot of money. Okay. So I have to, in order to combat that, in order to prevent myself from losing money, I have to offer a price that's higher. So I might offer the person, let's say Dimitri's coming in to buy, says, Felix, where can I buy 10,000? I'll say, Dimitri, I'll sell it to you at 380. Okay. I'll sell it to you. It's 340, 360. I'll sell it to you at 380, and I will sell what I have to. I'll buy whatever I can in the market, and then I will sell it to you at 380. Dimitri says, that's fine. I go in and lift whatever I can. I pay 350, 360, 372, 379, 380. I bid 380 for a few seconds. And after it stays there for a few seconds, I've already been buying stock as I've been buying these calls in the market. I can then sell it, and it looks like I'm selling it on the bid. But in fact, this was a buy order. Okay. So it's a buy order. So it's completely opposite of what we were thinking if we just looked at the alert. And I want people to understand the only way you can get that answer is by doing this sort of analysis, by actually going into the details and the data and seeing what has transpired prior to it and after the trade. Very, very, very important. So if you're going to base your strategy, the strategies, you're going to use a strategy your way, and it's based on following people who are buying options, then you have to actually be sure. This allows me to say, even though people might have thought this was a sale, I know it's a buy. Okay. And on the flip side, if somebody was actually selling the options, the way it works is he's selling, 340, 360, and you want to sell 10,000, I'm going to bid you 320. And I'm going to hit 340 for you, 330, 320. I'm going to offer. The market's going to be $3 at 320. And because I gave you the stop at 320, I will take the 320. And it looks like I took the offer. So now you look at it and say, oh, this traded 10,000 on the offer, when in fact it was a sale. So this is very, very important. And I wanted people to see, okay, to see what it takes, what it takes to actually figure it out, to figure out whether or not it's a buy or sell. But let's continue. Now we're looking at UOA, and I'm going to come up with an idea here, and it's I found the idea on October 20th. So on the night of October 20th, I'm looking through UOA. I'm doing everything I do that I filter, and we've done in other webinars. And once I click, I find BHF is trading significant volume relative to how it usually trades. I click on BHF, I come here. What we're going to be doing here is looking at basically two screens, the options chain, which you see on the left here, and then we're going to do the open interest, which I'll show you in a second. But here, I want to make sure that you see on the right-hand side, it says change dates, historical chain. You can click on that, okay? And out comes this calendar, and you can go back, I believe, Dimitri, how many months of data does it have? I think I think it has about 4 or 5 months.
Yeah, I think for time in sales, it has that much. If you go back any further, you won't be able, you'll see the options chain and the volume, but you're not going to get
right. You're not going to get the time in sales. That's one. So it's about 4 months.
Yeah.
I think it's about four or 5 months. Okay, so you'll be able to go back and see all the different prints. Okay, and that's going to be important for what I'm going to show you here. So because once you start seeing options trade, there's a history with options. Sometimes people are rolling. Sometimes they're shuffling things up and down, doing vertical spreads to move strikes around, changing the risk reward. So it's important. I'm going to show you how to actually use this, and it's something I haven't really shown. I usually show them the coaching, but I think it's that important. So we're gonna do that. We're gonna use this historical chain on the right with dates, and also you're able to click the volume, and this is where you get this module. And on this module, you get to see time of sales, quantity, price, the notional bid offer, the volatility, and the hedge. So these are two windows on the options chain that are going to be very important to us. Okay. Sorry. Get here. And now we're moving to the open interest. Open interest is very similar to the options chain. You're going to click on this open interest, on the open interest numbers here. And again, another module will pop up. What I'm looking at here is essentially the dates, the open interest that exist on that date, and the actual trade volume. I'm going to want to see where the open interest changed and how it changed with the volume trading on a particular day. That's going to give me some clues as to what's happening. Okay. Now let's get to, want to switch screens here for a second. So let me stop this share, and then I'm going to actually go through it for you like I go through it every day here. So you see my screen? Yes?
Yes, yeah, it's perfect.
Yeah.
Perfect. All right, good. So let's do, so here we are, BHF. I was taking snapshots before there, but let's just walk through. It's October 20th. And I actually see these 10,000 options. I'm going to click on February to pull it up. I see 5,000 and 5,000 on the 60, 65. To me, that looks like a call spread. Now, the question is, did the person buy the call spread or sell the call spread? Okay. I look here, I click on 5,000 of the 60 calls. I click quantity just to get it right. Let's just cut to the chase. 5,000 traded at 10.25 at $1.65. The market going in was 80.195. Volatility 37.6, 51.15 hedge. Okay, multi-leg, it looks like it was multi-leg means more than one. It's not singular. The multi-leg means call spread or other strategies. I think multi-leg can it also mean stock with stock, or is that stock contingent? If somebody was going to trade delta neutral,
That's a stock contingent.
Stock contingent.
Multi-leg
Okay.
means another option.
Another option plus this. Perfect. So we got two options here, and that's the $1.65. Because it's right in the middle, I'm not convinced on either way just yet, which way it was bought or sold. So I'll take a look at the 65 calls. And the 65 calls traded 5,000 times at 10.25. So there's our other leg. 80 cents is the price it traded at. The market was 75.95, and 80 cents is where it traded. It looks closer to the bid. So I tend to think here right now that it's actually a sale. If that was a sale, then the 60s it looks like he was rolling down from the 65s down to the 60s. But I want to be sure. I started looking into this. And I said, okay, let me go to the open interest. We're looking at February options. Okay. And I click on the open interest. I come down here. I look at February options. Now we're already in November. So it's not going to be, you're not going to see the volume that was there yesterday as if it was October 20th. So I'm going to click, because the 65s were a sale, I'm going to click the 65 calls to see. I'm going to scroll down to see October 20th. And there I am. Okay, October 20th. 5,000 calls traded. And the next day, the options open interest went to almost zero. It was 5,000 and it went to almost zero. So this was a sell to close. A sell to close. Okay, that's number one. Number two, the 60 calls, October 20th, on October 19th, no open interest, 5,000 trade, open interest the next day, 5,000 options, buy to open. I think, because I'm not convinced that the buy sell, but right now that's what it looks like. So now I want to actually say, all right, well, you know what? Let me go back to the 65s. That was a sale, right? We know that's a sale. Now I'm asking myself, when did they open the trade, right? I know they sold them to close. When did they open the trade? So I look down, scroll down here. September 3rd, they opened the trade. Look, 5,000, open interest 5,000. September 3rd, great. Keep September 3rd in your mind. Let's go to options chain. Now I go here to September 3rd. September 3rd, there it is, 5,000. 5,000 on the February's. I click on the 5,000 and the volume to see what happened there. 2,500 at $1.10, 2,500 at $1.10. Also a multi-leg. Okay, that means it traded with another option. And this one traded on the offer. And if I'm looking over here, it looks like it's an actual real offer. So this looks like he bought them here and he bought them to open. So I just figured out that on September 3rd, he bought 5,000 calls at $1.10 to open. And on October 20th, he sold them to close. If I know that he sold
hey, Felix.
Yes.
Just a point of reference, you don't have to keep going back to that open interest tab. Like, do you see up top there where it says tracking? You have the same view.
Oh, that's awesome.
Yeah, so you could just do it from here.
Save me about 10 minutes every day.
Yeah,
perfect.
Just
okay, so tracking. Good. I like that. Perfect. See, I learned something new every day. So we're paying 5,000 $1.10. Now, because we saw multi-leg, and now I see clearly this one's easy. The September 50 calls traded 5,000 times as well. So what did he do here? We know he bought the Febs. It's likely that he sold these to buy the Febs, but let's check. Click on quantity. 2,567 cents, 2,568 cents. So 67.5 cents, 68 cents. And the market was 65.85 going in. Makes sense. Looks like he sold them to buy the Febs. So he sold 5,000 of the 50s to buy the Feb 65 calls. So far, so good? Good. Now, I'm curious about these. I'm going to do what you did here. So click on tracking. So 5,000 here, he sold. He sold these right here. Now I can go back, and here it is, August 11th. On August 11th, 5,000 trade. Because I know he's closing there, now I see that he's opening here. So let's go to August 11th. There we are again, September. It's the September 50 calls. Looks like he bought them here. And you can see the different prices. Let's call it about $1.25, $1.30. And again, we will see that he bought them here and he sold them here. I will also tell you that we have another trade and he's just going back. And so again, what I am doing is I'm simply filling in the story for myself. Ultimately, I'm trying to figure out, and by the way, I mapped this out for you, so you don't have to do this. I do map it out, and we're going to go back and do it a little bit slower, but I'm showing you that I'm going back in time, and I'm trying to figure out what led to this guy buying and selling. It's going to tell me a story over time. Okay, so now I click on this and I could see that this is 24 cents. It looks like a sale again. Looks like he's just rolling. He missed here again. And actually, let's do that. The tracking. 5,000 traded here and 5,000 traded on July 10th. So on July 10th. But you could see that there was also 10,000 here, July 16th, 19. And it looks like somehow there's the August 11th. Looks like he sold. See, there was 10,000 on July 10th. He sold these on July 10th and on July 19th and July 20th, the open interest went down. So there were 10,000 here. He sold half. Okay. What we will find is then on July, let's go to what price? Actually, I think it was in June here. On June, I have it written down. Hang on one second. I want to say it's June 9th and 10th, but give me a second. Yes, June 9th and 10th. On June 9th and 10th, we're going to see, and this I didn't realize about the tracking. I actually went the long way. I went each day checking to see when he actually opened these other trades. But on June 9th, we see the August, this is June 9th. We see the August 5,000 were bought here. And then June 10th, another 5,000 were bought. Okay, these were actually bought. Okay, so now let's go back. Now that we've done that, I'm just going to show it to you one more time quickly. So let me stop this share and come back to where we were here. All right. So we're here now, and we went through this process. October 20th, we got our 5,000 spreads, 60, 65. We checked them both. We have prices. We're not necessarily sure exactly if they're buying or selling. Okay, but if we go further and check the open interest, we go back and we can see when it was actually bought and sold, and we can see that this was opening and closing. We can see which one is opening and closing. That's really, as far as clues, we can get there. I'm not confident at this point that I know which way the guy bought, whether he bought that call spread or he sold that call spread. I'm not completely confident. So I actually go and I don't have a better way than just writing it down on a piece of paper, and I start writing down what I'm seeing and what I'm sure of, right? I can fill in that it's closing here, and I can fill in that it's opening. Okay. And then the question was, well, when was it opened, right? If he was closing there, when did he open the 65s? And we can go back into the open interest and we could see September 3rd. We go back to September 3rd. September 3rd, you can see this is the screen that we saw. And then we opened up the 65 calls in February. Okay, clicked on that. The 65 calls gave us the 5,000 that were bought there. Okay, and we then checked the Septembers on the multi-leg, and we saw 5,000 options, and we saw that those were a sale. Okay, so here we're seeing that the person sold, the person did buy the 65 calls. So now we can say definitively that he bought them, he was closing, and then he was opening. So by working backwards, we were able to say that he was opening here in September, which meant he was buying to open, which meant that he was selling to close in October, which then fills in the blanks of buying to open in the 60 lines in October, which is what we were looking at to start. So now we're clear there. Now we see that he was actually selling. We can fill in the blank, selling to close, and we work backwards, and we keep working backwards. So it's the question is, when was that open? And we go back, same process. I didn't have this, so that's why I'm pointing and saying I don't have that detail. But Dimitri, you just showed me now I can actually go and do that, and that's what I did. And we saw that. And I went back and I found on August 11th there was a seller of 5,000 and a buyer of 5,000 of the August, and a buyer of 5,000 of the SEPs. In June we found this. We found the same thing. In June, we found the same thing. We found in August, 50 calls, the June 10th and June 9th. I'm not sure. I know this one is open. I'm not really sure about these. I wasn't convinced that I knew. I thought they were both buys, but I wasn't convinced for sure. So we're going to go back to that in a second. And now I want to put it to you in a chart. So this is exactly what I do. I'm a visual person, so I write things down. I sort of map things out for myself and say, okay, I kind of got the flow. Now let me try to back out the story here. Let me try to figure out what's actually happening. On June 9th and 10th, it looks like he bought 5,000 and 5,000 of the August 50 calls. Now I looked, and August 5th was the earnings. So it looks like he's coming in to buy the earnings. He's leveraging up. He's getting some options, and he looks like he's buying the 50s to break that blue line I have there to 50 and have it rocket ship up. So that's what he's playing for. Fair enough. After earnings pops up, after earnings, he goes and sells his August 50 calls. Only one 5,000 lot. He sells 1,000, then he buys, after the earnings, he buys the SEP 50 calls. He must realize he doesn't have enough time. He's about to lose. It's about to expire, and so he wants more time. He buys the SEP 50 calls after the earnings, thinking again, it's going to blast through 50. Okay. At this point, by the way, I don't know much about Bright House. I really don't. I'm just sort of mapping things out and trying to figure things out for myself on what is this person looking at. But after the earnings, he comes in and says, I want to get out of my August. I'm going to buy some SEP 50s. After buying the SEP 50s, a couple of weeks later, the stock trades towards 50. Again, he's approaching expiration. He has September. It's already in September. He says, you know what? I'm going to sell my SEP 50 calls, and I'm going to buy the February 65 calls. Okay. He just jumped from 50 calls to the 65 calls. It's a big jump. It's a big jump, 15 points in a strike. That's 30% in an option, but he's going out for February. Something tells him he needs more time here. He needs more time. Time goes by. It doesn't work. It goes down, starts shooting up. After it breaks 50, that's a positive development. You could see that line. It's a clear breakout, at least for a period of 6 months. He comes in and he says, you know what? 65 might be too much. I'm going to take the roll, and I find value in the roll. I'm going to take it from 65 down to 60. That's where we are. That's where we were at the time when I'm seeing this trade, and eventually this is where we are today. Now, when I look at this, to me, it's clear that 50 was a big level for this person. It's also clear that something happened between the earnings date and a few weeks later. He is either more confident now that this thing's going to explode. He just doesn't know when, but something really happened there. So I'm at this point, I like what I'm seeing. I see somebody that's getting aggressive. Okay, as it's coming down, as it's approaching a 50, he's getting aggressive on his buys. In September, he basically says, I've played this game a few months. It hasn't worked. I need more time for people to either understand the story of what's going on. I don't know what the story is. I'm just looking at the option, but that's how I'm reading it. I'm basically reading this guy he's buying calls, and then he gets very aggressive as far as strike price. How high does he think it's got to go if he's buying the 65 calls? The stock is only 49. This guy, to buy the 65 calls, he's got to be thinking, it's going to 75, 80. Okay. So I then go look at at holdingschannel.com. It basically gives you the holders and the 13 Fs of all the hedge funds. On this is BHF. I see a couple of things. Okay. First thing is the obvious one. The call buyer looks like Masters Capital Management. You see this calls 1 million shares. That's 10,000 options. So I can go back and think, oh, those the June 9th and June 10th, 5,000. Likely it was him because this date is June 30th. At the end of June 30th, we get to see everybody's portfolio. There it is. That was Masters Capital. That's our shark. Okay, so I'm looking at that shark now. I know Mike Masters. Mike Masters is a savvy guy, really smart guy, really nice guy, but he's a savvy guy. And he is long 1 million shares through calls or, 10,000 options, and he's long 100,000 shares. This has been him that we've been following. This is the shark. Okay. And I feel comfortable with that because I know Mike Masters is smart. I know he's savvy. I know him not so much as a value guy. I know him a little bit more as a momentum type of trader. So I like it. I like what I'm seeing here, but I also see something else. I also see, this is Mike Masters, what we're seeing there, just in case you can't see it. I also see, and this is, by the way, sorry, the June 30th, what I explained here, we know that this is buyer and buyer now. I also see Greenlight Capital. Greenlight Capital is managed by David Einhorn. David Einhorn is a picture. That's David Einhorn. The second guy there is Curtis Schenker. And then there's Michael J. Fox, his wife, and Derek Jeter. That was probably at the Michael J. Fox Foundation. Curtis Schenker was my boss. David Einhorn was in the office all the time. Very nice guy, smart guy. I consider Curtis Schenker a very smart guy, and he thinks David Einhorn is one of the smartest guys he's met. So, I look at that and I say, that's I want to pay attention to what this guy's saying. Now, I've been at many conferences listening to David Einhorn, and he's a smart guy. He has not, smart in this business sometimes doesn't translate to, percentage returns. He's a value. He's known as a value guy. He's looking for value. He runs a hedge fund long short. In the last 10 years, he's been short the ones that are going straight up, and he's been long value that nobody cares about. And so he's frustrated and he's lost many assets, but that doesn't take away his intelligence. Okay. Losing in this game doesn't mean that you're not smart. It just means he's having a bad run. Before the last 10 years, he was amazing, billions and billions of dollars of assets, but he's given a lot of it back. In any event, I'm trying to explain to you that when I see someone like David Einhorn long something, I get curious. I know that he writes a letter and he publishes it each quarter, and I go in there looking around and I start. He's a good storyteller. He's a person that is going to tell you what he thinks and why he thinks he's long the name, right or wrong. So Greenlight Capital, I look in and I see BHF. He's one of the biggest holders. He wants to talk about it. He tells a really interesting story. Okay, BHF is produced great numbers. The stock really didn't move. And he's saying there's more to the story here. BHF's core business is a variable annuities, and to a lesser extent, life insurance. They basically got this business from MetLife in the spinoff, okay? And he says these are business lines which are no longer being originated. BHF has them contained in a Delaware subsidiary for which there is minimal financial disclosure. Okay, this is the part. Skeptical investors have worried that this subsidiary could be the black hole that will drain the value from the rest of BHF, right? If an investor doesn't know what's in this Delaware subsidiary, they get nervous. BHF is trading at 0.3 times book value. So the banks, any bank or financial company usually trades around 1 to 1.5 times book. This is trading at 0.3 times book. Okay, so the stock is around $50. You're talking about a book value of like 170. When I see something like this, I say, aha, okay, now I understand why Mike Masters is buying calls at 65, because if people start recognizing that this is actually valued at a lot higher, then stock's going to take off. Okay, starting to make sense. He then goes on and says that to us, it seems that what was suspected to be a black hole is I'm sorry, let me go back to the exclamation point. He says something very strange happened to that theory of it being this black hole of losses this quarter. The regulators approved a $600 million dividend out of the Delaware subsidiary. So the regulators are basically looking at this black hole and saying, you know what, you can take out $600 million and give a dividend to another subsidiary within the company. Management, true to form, has given no hints as to what extent there will be more dividends to come. He says to us, it seems that what was expected to be a black hole is actually a cookie jar. We just don't know how many cookies are in the jar. Either way, the consensus view that the runoff business will be a drain ought to be discarded. He goes on to say that they've been buying stock. Here he says on the right, this has helped take stated book value per share from $120 to $175. In the most recent quarter, BHF authorized another $1 billion in buybacks, which is about a quarter of the company. And blah, 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 it goes on why it's great value. Okay, I then looked and I started figuring out, okay, when did this announcement happen? This announcement was made on the earnings. So now we have our story here where in August, when the earnings came out, Mike Masters, like an Einhorn, they both, and Einhorn has since increased his position. Masters has increased his position. Okay, they see what's happening and they see that this could potentially be a gold mine, because a financial company shouldn't be trading at 0.3 times book value if there really is no problem. And in fact, it's not just it's a problem, it's actually a positive thing, because they're taking out all this money and the regulators are saying it's okay, it's all good. So this is the scenario, this is the trade. We've used options data to go back and fill in the story for us. We've used charts to put it into pictures and to sort of give us that visual that we might need to get us through, to get to the trade. And then I added a longer time period to figure out sort of why 65 calls, where can this go? And, the stock has a history here over the last few years. I'm looking at this sort of symmetrically and saying, you know what, breaks 50 seems like a big level. And you know what, can it get to 65? Absolutely. I chose the February 55 calls, same expiration he's choosing, Mike Masters is choosing. I get the earnings again. This is sort of a, if nobody's looking, this thing doesn't move. But at the end of the day, if we go back and see who are the owners, we have Dodge and Cox, who's a value guy. We have Greenlight, BlackRock. We have, I don't need to do the fundamental analysis when I got 4 guys behind me who are deep value guys who are saying, you know what, this is good. We just don't know when it's going to happen, but it's actually a good stock. It's a good stock. And we need eyeballs on it to basically say, whoa, this stock's got to go up. Or as Einhorn was saying, they're buying so much stock that it's not going to matter. At some point, there's only going to be so much stock left. The stock is going to zoom up because of it. That might take some time. This is a story that needs some eyeballs. So that is the story. We paid $3.40 today. It's $3.15. So, do what you want with it. But that is what I'm doing at Winning Picks Premium. Win or lose. The most important part about this is that win or lose on this trade, I would do it again, given the same facts in the same situation. I think it's a great risk reward, and I would do it again. So that's again what we're doing at Winning Picks and how we're looking at things. We're trading a strategy over time. We're trading a strategy that finds these ideas, plays it under a certain plan or strategy, and sees results with time. Again, with time. Now, people talk about. I haven't posted up. I've been a little lazy. I haven't posted the Winning Picks Premium results since the beginning of the year. It's been a choppy year, frankly. It was a good. I'm going to give you the results here, but in the last 3 months, okay, this was just sent to me from a Winning Picks member, and it matches exactly what I think it should be. He had the good fortune of starting on a good date. Okay, great start. So he started on September 1st, and he sent me this on November 5th, which was 106% return on his total portfolio. It matches sort of what we've been seeing here throughout the year. I had a very good January. February, March was solid. April was a complete disaster. I mean, I couldn't even hit the dartboard. I couldn't even hit the wall. Forget about the dartboard. It was like, missing on everything. So we were down significantly in April, May, June, flattish. July, August, September, October picked up tremendously, and we had some very good winners there and did very well. November's started off a little bit slow here. The market is, people ask me why November or why April. The market, when the market makes a big move and then all of a sudden it's digesting and it's moving up and down 1-2%, that's never good for options. So right now, even though in November we're down a little bit here, we have some good trades from October, November. I like the trades that we have on. I like the way we're positioned. By the way, this is not, when you're looking at this isn't, we're not just going out there buying every call there is and chasing every, fantasy stock with this, these big moves. We're methodical. We're buying call options like BHF. We're playing it for 4 months. We think it's a good trade. We need eyeballs on it, and the thing will have a spark. I'm using a little bit different technique here over the last 4 weeks, because the market is not, it's a mirage. It's not necessarily moving so much. So I'm trying to play it somewhat safer right here until the market decides what it wants to do. We are always long puts. Oh, maybe there was a period of 2 weeks where we had no puts at all. And I was trying to take a stand to go long, but we're always long puts. We have puts right now. Sometimes they work, sometimes they don't. I wake up every day hoping that, I don't make 1,000% on the puts, because the market would get crushed. We would do okay, but at the end of the day, you just don't want the market getting completely annihilated. So this is long and short. We're playing it calls and puts. we're trying to play it. We're right now we're long some gold. We're long puts in the S&P. I have some, I do have an EV name in there. I have trying to be careful as we can, staying long in this market. I'm trying to stay long, but I'm trying to do it in a smart way. So there you have it. I will come in with more of the details for people online, but it's there you have it. It's I don't shy away from anything. I happily give everybody the results, but you can see how this September 1st of November sort of matches exactly what what I'm seeing. And frankly, on some of this stuff, I try to be very conservative because I know there's a lot of eyeballs on it and a lot of people ready to pounce. So
well, that's some awesome information, Felix. Everyone on the chat is super thankful for you revealing how you go through this process. Goat actually was mentored by you and said it was worth every cent. And Goat's a pretty regular with us. He comes on some of the morning shows and is an active participant in the Chameleon community. And Dante was asking if he wants to touch base with you. I mean, I have a link. Do you have a way one of the Chameleons could reach out to you to ask about mentoring or?
Sure.
I don't know.
Felix at optionsgeek.com. It's very easy. Felix at optionsgeek.com. It's crazy. People, my Wall Street friends say, what are you doing speaking to like old lady at at Saturday morning at 10 o'clock? I say, you know what? I talk to everybody. I spend a lot of time. I don't sleep. I'm always, working and trying to help people and help people understand options and help people play this game in an easier way.
We did have a couple questions early from our friend Mike Chandler from Tyler, Texas. He was asking, are there specific times of day you look for significant option volume, or are you constantly looking at it throughout the day? Yeah, it's a good question. I'm looking at it all day. I do look at things, nothing before 10 o'clock, really 10:30. I would say, here's what I would say. There's a lot of opportunity at 9:30 to 10 o'clock. The reality is that the P&L, the volatility of your P&L is going to be dramatically higher than the way we're playing this game. So that means you're going to have big wins, but you're going to get killed a lot of times as well. There's a lot of people that lost a lot of money today buying the open and then getting crushed, right? There's a million options came in to buy the open and buy all the big names, and a lot of them turned by noon. So, it's how you want to play it. There's stuff coming in right at the get-go. I like to make sense of what I'm buying. I look at this and I say, this is what I'm buying. Now, imagine it's not easy to find these trades. That's why I spend 5 hours a night, going through stuff and looking at things, a lot of different trades, trying to find, something that makes sense, something that I can stand behind and say, this is why we're buying it. This is who I think's buying it. So I would say that depending on how you want to trade the UOA, any time is okay. Morning is okay. I tend to wait till about 10, 11, 12 o'clock as the day's going and things start popping up and you could see the action. I don't get nervous about missing, the next, move that's going to be 1,000%. It's sort of a little bit more methodical approach. This Mike is also asking, when you're entering your order, do you middle the market? Do you take out the offer? Do you sit on the bid? And then how much, like you just mentioned, this BHF, do you look at each trade with a specific amount? And Dimitri talks about this all the time, how much of your overall capital you're going to put at risk, right? And you mentioned one of the options geek traders who's, recording all his trades. I mean, it seems to me you have to be very careful about, whether you're buying options or selling, not to put all your eggs in one basket, right?
100%. 100%. So, the problem that I run into, I tell people to stop. So we don't take any, the golden rule is we don't take any option to zero. The problem I run into is I tell a compelling story. And then if the option is no good, I've told people you got to get out. Like we just got to start like shuffling out, or for the more senior traders, we got to adjust or do something, because we just can't let this thing go down from $3. I won't let it go from $3 to zero. It's just not going to happen, right? And so, it's important to understand this game is a probability game. And with any probability game, if you have edge, you want to play it as many times as possible. So you don't want to put all your eggs in one basket. It's not the way it works in this game. You could, I mean, there are a lot of people that have made a lot of money putting their whole life savings in AMC and GME. Who am I to say that's wrong? I mean, it's, there is theory out there. Yes, Bill Ackman's portfolio is, mainly 10 stocks, 5-10 stocks. And the ones that he loves, he bets big. So, there's different approaches. I don't think there's any one, one perfect approach. It's not like the results shouldn't dictate whether or not it's a good way to do it. I don't believe in putting your whole life savings on any one trade or any one stock. It's not the way I would tell people to do it, but people have done it and they've made $1 million, and they're going to keep on doing it and find the next one. It's up to everyone on their own to sort of find their way. I would say personally, you want as many of these trades as possible, and over time, the math will work. At Options Geek over the last 3 years, on a rolling 1 year, what happens is a lot of people come in. If you came in April, you're disgusted and you hate me, and I understand. I get that. I would hate myself. I would fire myself, right? So, but I tell people on a rolling year, people on average are up 50 to 100% on their portfolio over the course of a year. That's what I would say is the average. Some people more than others. Some people are better traders, than I am, or than the average person. And a lot of the returns are really come down to how good you are at entering and exiting these trades. I give certain parameters that I think, that work, but some people, they know what they're doing, and they say, no, I like it, and I'm going to let it run a little bit further than other people. And so that's where people have a little bit differences, but in general, 50 to 100% on the rolling average is what people have seen.
All right. Anthony, who referred to Felix as the data detective. I don't know if you like that.
That's right.
I thought that was pretty cool.
That's what it is. It's being a detective.
He was asking you if you don't want to expand on it, no worries. These videos live out there forever. They're on our YouTube channel, so you can go back and rewatch again and again how Felix described looking at the bid and the ask and deciding whether it was buying or selling. He was just asking if you could explain it a bit more. I don't know if there's any way to do that easy, or they should just go back and rewatch the video, but that was something that
what I would say is that there's several ways. In 3 steps, I go through a bunch of them. One, it's like triangulating. It's like being a detective, right? It's like you have the facts, we have the data. Now I'm trying to triangulate whether or not this was a buy or sell. In this case, it was because the bid offer was moving at a quick pace from 340, 350 to 380. And so I could see that it looked like someone was stopping the trade at 380. And then it took everything up to 380, left it there for a moment, and then wound up selling it at 380. So that was one way. The other way I'm looking at implied volatility and how implied volatility changed or how that moved. Not any one might give me the answer. It might just be, I might hone in on one thing and say that looks like what I'm looking for. And, so I wouldn't say it's one answer, but I would say it's, how the premium changed. I would say how the volatility changed prior to the trade. I would also say, how did the stock move at that time? I didn't show that here, but I would go back and I would say, BH, in this case, whatever that stock was, how did that trade at the exact times that those options were trading? Did it go up? Did it go down? What was happening in the stock? That's going to sort of give me some clues as well, right? Because we talked about a hedge. If somebody's coming in to buy 10,000 options, somebody's got to buy stock, right? And that would be me at Bank of America sitting there going, all right, I'm going to sell you the calls, and I got to go buy 500,000 shares of stock. So stock's going to move up. Okay. And if it's a name that is not as liquid, it's going to be a lot easier to see that. Okay. So there's not one particular way. I was showing you there how the bid offer was moving. And I think what's important is the logic that I'm explaining to you of how a big guy comes in, whether he comes to Goldman Sachs or he comes to Bank of America. When he's talking to the trader, he wants to buy 10,000. Those guys are not, they know that they're not getting the bid or the offer generally, right? Yeah, if it's Apple, it could be inside the market. It's like whatever you want, but usually they're not trying to trade Apple or Microsoft. They're trying to trade BHF, and you're not getting BHF, mid-market, generally. You're going to pay the offer, or you're going to pay through the offer.
All right. So I put the link to your website in both the YouTube chat and on the Zoom. Anyone click on that, get in touch with Felix. Felix, do you have like an insiders group where you discuss your trades? Is that part of it, or is it a newsletter? How's it work?
So right now I just have the newsletter. Pretty soon I've been thinking about having a chat room community. I'm not there yet. I'm not sure exactly, how I want it to look like. But right now it's the newsletter, and it is, it's events like these. I'm going to get back into the YouTube, pumping out some videos. But yeah, I've been thinking long and hard about how to do potentially a chat room. I'm not sure. I'm going to test demand in the new year and sort of see, and if we get enough people, maybe that's the next move.
All right. Well, we are right up against the end of the show. So no more questions, but just something to think about. Nick was asking, how would you work out of an exit of your trade? Like, you mentioned you're long. Now it's time to get out of that position. I mean, that sounds like a whole nother show.
We could come back. We could come back and do that. But yeah, I mean,
but it's something that if you in your newsletter, do you let your readers know that you may be exiting out of an option? I guess.
So what
changed.
So what I do is to make it easy for people is to understand sort of these markers and why I choose markers. I say I'll give you the first one, 100% exit. So you buy something for $1, okay? I want you active at 100% gain. So it goes from $1 to $2. I want you thinking about taking some money off the table, right? $1 to $2. I tell people take off a third. Why a third? It's simple math. If it goes from $1 to $2 and you take off a third, you're taking off about 66.5 cents. It's 2/3 of your original investment into the trade. And it allows you, there's something about this, there's something about taking a little bit off that allows your mind to ease a little bit and to be less focused on one particular trade where you just keep looking at it. So I tell people at a third at 100%, and then 175, and then 250. Those are like the parameters, 250 plus. You want to let the last leg sort of run as much as you can. 175 could be 200. So it could be 100, 200, 250 plus.
All right. Awesome job, Felix. That is the hour. Everyone's got to go feed their kids, eat their dinner, get ready for tomorrow's trading day. Felix has 5 hours of work ahead of him to get the ideas to his community tomorrow. Dee and I have our morning show tomorrow. Lots of great ideas for Felix on what to do with a chat on the which is always great. I recommend everyone click the link that I've put in there 3 or 4 times. Get in touch with Felix. Felix, whenever you want to come back, you're always welcome. The Chameleon community loves you. I'm very thankful for you putting on these webinars. And there's the history of these webinars. Remember, the YouTube channel has everything we've ever done. So they're like 50. So just if you go search Felix on our YouTube channel, he must have at least 5 or 6 videos.
Yeah,
some of them were so early.
Come on, on the website, I have a whole library of videos, free videos on the site, also on YouTube. But if you come to the site, I sort of put it in a nice order for people to go down from beginners to intermediate. I frankly think everybody's a beginner, and so I get people, challenge them. If you think you're an intermediate, I'll challenge you up front, and show you something, ask you a couple of questions. But I want people learning, and I want people thinking about options in a different way. And so on the site, It's free membership. There's no, you don't even need an email. Jump on and watch some of the videos. And if somebody has questions, you can reach me at Felix at optionsgeek.com.
Perfect. All right, my friend. Thank you so
Thanks,
much.
everyone.
Dima, any
Thank
final
you,
words
Felix.
for chameleons?
Thank you,
Thanks,
guys.
everyone. No, that was great. Always entertaining, always informative. I know I talked to a lot of your customers, Felix, and they're always psyched and they can't wait for you to come on, and they really
Awesome.
appreciate the help that you made. Like, some of them, even they didn't know much about options, but we have right now customers I talk to who are already in there for years, and they owe it to you. So
Awesome.
thanks,
Awesome. I'm
Felix.
super excited. Yeah, we'll come back. You guys give me a topic that everybody likes, and we'll come back. We'll make sure everybody gets it.
All right.
Definitely.
You can send those topics to Dimitri at support@MarketChameleon.com. He'll pass them on to me. We'll both see him, and we'll get Felix on.
Perfect.
We'll try to bring it back once a quarter.
That's awesome. Yes.
Everyone's busy, but Felix is great, and it's great for the chameleon community and great for the investing world to hear from Felix. Thanks, Felix.
All right. Be good. Thank you, guys.
Thanks, Steve. We'll
Thanks,
see you in the morning, 9 a.m., everyone, the morning show. Have a good night.